You know, every now and then you come across a classic corporate comeback story. And today, we're diving deep into one. We're talking about Quarterhill, a company that, if you look at their latest earnings report, has just gone through this massive transformation. Seriously, they've gone from just trying to keep their head above water to setting their sights on an AI-powered future. It's quite a pivot. So it makes you wonder, right? What does a corporate turnaround actually look like from the inside? It's almost never just one big, dramatic decision. Nope, it's a whole series of deliberate, sometimes really tough actions that completely reshape a company from the ground up. And that's exactly the story we're going to break down today. Okay, so before we get to all the good news and the impressive results, we really have to set the stage. At the start of 2025, Quarterhill's own leadership had one central mission: stabilize the business. Now, that's pretty calm corporate speak for what was basically a five-alarm fire. It meant they had to fix the fundamentals and they had to do it fast. And look, here are the CEO's own words, which really lay out the battle plan. This wasn't just some vague, hopeful statement. It was a clear three-part mission. First, stabilize, or, stop the bleeding. Second, improve discipline, which means making sure every single move is a smart one. And third, get back to sustainable profitability. They weren't aiming for a single good quarter, they were trying to build a much stronger foundation for the long haul. So how in the world did they pull it off? Well, not with wishful thinking, that's for sure. They did it with a plan. Management put together this super clear, actionable strategy. Let's take a look at the four-point plan that really became the blueprint for this entire turnaround. What's so great about this plan is just how practical and down-to-earth it is. No fancy buzzwords, just action. First, they cut costs to match how big the business actually was. Second, they found ways to make their core tolling programs more profitable. Third, they got really strict about bidding on new projects, making sure each one would actually make money. And finally, they tightened up oversight from the top down. Simple, direct, and as we'll see, incredibly effective. Look, a plan is just a plan until you see the results, right? And by the second half of 2025, the numbers started to scream that this framework wasn't just some theory. It was really, truly working. So let's get into the proof. First up, gross margin. This number basically tells you how profitable a company's main business is before all the overhead. Quarterhill hit 31% in the fourth quarter. Now, for a company that was just trying to stabilize a year earlier, that is not just a healthy number, that's a knockout punch. And this chart just says it all. I mean, look at this jump. They went from a 20% gross margin in the fourth quarter of 2024 all the way up to 31% just 1 year later. That is a massive 11-point increase, and it's a direct result of that four-point plan we were just talking about. Next up, adjusted EBITDA. I know, it sounds a little complex, but it's a fantastic way to see how much cash the company's operations are generating. They posted a positive $4.4 million. But here's the kicker. This was their second positive quarter in a row. That's not a fluke, my friends. That's a trend. Now, this might be the most important number of all when it comes to their newfound stability. A backlog of over $400 million in contracted revenue. This gives them a crystal clear view of the work and money coming in for years to come. That is exactly the kind of security a company in the middle of a turnaround dreams about. So, they've stabilized the ship, they're profitable again, and that financial foundation is absolutely crucial because it gives them the freedom to stop just fixing the present and actually start building the future. And for Quarterhill, that future is all about one thing: AI. The CEO makes it perfectly clear here. The future is their new AI platform. It's not a side project anymore. He says it's becoming central to how they compete. The company's focus has officially shifted from playing defense to playing offense. So what is this platform anyway? Well, think of it as a single, smart command center for transportation agencies. It uses some seriously cool tech, like vehicle fingerprinting, that's identifying a car by its unique features, not just its license plate. It then combines that with predictive analytics to manage traffic, improve tolling, and spot problems before they even happen. It basically takes all these disconnected tools and puts them into one smart, unified system. And why does this matter so much? Because the market for this stuff is huge. Beyond the contracts they already have, Quarterhill is looking at a pipeline of potential new business worth about $2 billion. That is the massive prize they're now chasing with their new AI tech. But, no great comeback story is complete without a final challenge. After all this incredible progress, stabilizing the business, boosting profits, building this next-gen platform, there is one pretty significant obstacle still looming on the horizon. And there it is, the company's balance sheet. Its financial report card, basically, is under pressure. So while the operational side of the business is fixed, the financial structure itself still carries some major risk left over from the past. Let's just break down these numbers real quick. They have just under $25 million in cash. The problem? As you can see, they have over $50 million in debt that's coming due later this year. That is a pretty big gap they need to close, and yeah, the clock is ticking. Now, to be clear, the company is not ignoring this. Management has stated very plainly that they've hired financial advisors and are already deep in the process of refinancing all this debt. They know it's their #1 priority to lock in the company's long-term health. So this brings us to the final crucial question. Quarterhill has pulled off an incredible operational turnaround. They've built a clear path to an AI-driven future, and they've got the numbers to back it up. But can they solve this final piece of the puzzle and refinance their debt? Clearing this last hurdle will be the true test of whether this is just a great comeback story or the beginning of a whole new chapter for the company.